Well, hello, everybody. My name is Lee Schwartz, and I'd like to welcome you to our webinar titled Myths and Facts about Health Insurance for Your Practice. Now, for those of you not familiar with SVA, we were founded 47 years ago, which means we are just about halfway to our goal of being a 100-year firm. Our vision is to remain independent, so while a lot of other regional firms look to consolidate or merge with larger ones, our goal is to continue serving the same clientele we have since 1974, and that includes veterinary and dental practices. With that in mind, we've really strived to provide more information and assistance in the last 10 months than anyone else. We've conducted 32 webinars and have had, I think, over 5,000 attendees. When the first PPP loan program was launched, we provided guidance not just to our clients, but to anyone with questions, because the stronger your businesses are, the stronger SVA is. And we've got a bunch of other events coming up, which I'll tell you about at the end of today's event. Now we'll jump in here in just a sec, but a couple of quick housekeeping items. If you have a question during the webinar, open up the chat box in Zoom and submit your question to all panelists. We are going to leave a few minutes at the end for Q&A. Also, we're recording this webinar today. You'll receive an email with the link to a survey, as well as our SVA resource page where the webinar recording will be available. Many of you are already clients of SVA, and we'd encourage you to reach out to your SVA contact if you have questions coming out of this. Over the last 10 months, we've found that there are just a ton of practices that aren't getting timely or knowledgeable advice from their CPAs or their advisors, and we're happy to step in and help. So please feel free to share this information or our contact details with others. Now, if you yourself are not a client and you have questions, please reach out to me and I'll get you connected to a subject matter expert who can get those questions answered. Now, I noticed a lot of familiar names on the attendee list. We did tailor this content for veterinary and dental practices, but I noticed there are a few of you that maybe don't fall into those categories. Don't fret. Most of the content will still apply to you. Okay, so if you've attended any of our past vet or dental webinars, you are probably already familiar with Andy and Matt. But for you first timers, both Andy Slinger and Matt Vanderloo are CPAs and principals with SVA certified public accountants, and they help lead the team that works with dentists and veterinarians around Wisconsin and really the whole Midwest to help them minimize taxes and maximize profitability. So I'll be back towards the end for the Q&A, but Andy, I'm going to let you take it from here.
Thanks, Lee, and thank you everybody for joining us. Well, health insurance, talk about a heavy topic that you picked today. But the one thing you know as practice owners, okay, is that what comes with being a small business owner is you almost by default have to become a human resources expert, whether you like it or not. And, you know, 2020 just added complexity to your life, okay, because when COVID exploded, suddenly you were dealing with potential layoffs, with furloughs, with sick pay, sick leave, et cetera. And it was very challenging for you. And, you know, our goal today is to really try to focus in on the topic of health insurance and present it at a high level, because what we realize is that not only are you all in different geographic areas with different options, different staff, different needs, but you're also all at different points as far as your employee handbook or the health insurance plan that you're currently offering or your cafeteria plan that you're offering. So you really are in a wide array of points right now. So we really want to make this a high level presentation, give you some things to think about, and know that at the end of this presentation, this is going to lead to more conversations. It's going to lead to more conversations with us. It's going to lead to more conversations with your attorney potentially, with an HR consultant, with a health insurance agent. This is going to lead to more conversations. So knowing that we're going to try to keep it to a high level, what are we trying to accomplish today at the end of this presentation? First and foremost, we want to provide some definitions. You know, what is a large employer? What is a small employer? You know, in many different facets, we realize the difference that your entity makes. So we're going to make some differentiations on what type of corporation you are versus a partnership versus a sole proprietor and what that means. Once we define these things, then it's, well, why offer health insurance, regardless of whether I have to or not? And you're going to find that it's comes down to the tax benefits and the ability to retain and recruit the best and the brightest in your practice. Then we'll get into the what. You know, a self-insured or funded plan versus a fully insured plan. We'll drill down on those fully insured plans and look at the different types and the key components of those. You know, when people leave or when people are laid off, as this year, the topic of either COBRA or Wisconsin continuation comes up. So we'll give you an introduction and a resource for that. We'll look at a cafeteria or a Section 125 plan and what that is and what that means. And again, we'll drill down a little bit and give you 3 examples, an FSA, an HSA, and a qualified small employer HRA. And then again, at the end, all right, what do we do now? Where do we go from here? You know, what should you be considering? All right. So having said that, let's start out. As I mentioned, you know, as Lee talked about, you know, one of the things I enjoy the most about, you know, my career is that we work very closely with our clients. We're very proactive. We really get to know them and get to know their businesses. And what naturally happens is that we become their trusted advisor, and not just for tax. All of a sudden now for consulting for any major life event that happens, we're their first phone call. And so that's a wonderful thing, and I really enjoy it. The one thing then that we have to be careful of is we have to pause sometimes and say, wait a minute, is that a legal question? Because as CPAs, we can't offer legal advice. So I just want to let you know that a lot of these topics today very easily delve into the legal world. We're not here to offer legal advice. Okay. At the same time, you're going to need a partnership with a health insurance agent if you're going to offer health insurance. And so again, this presentation will lead to that conversation at the right time. All right. Now, as far as the broad topics, the broad buckets of health insurance coverage, I've crossed these out for effect. Okay, there's individual health insurance, individual plans that you can go out and purchase as an individual. We're really not covering those today. And the other end, there are government-sponsored programs, in particular Badger Care, Medicare, Medicaid. Again, we're not going into those. Those have their own complexities that are a whole separate seminar. Today's focus is on group health insurance or employer-sponsored health insurance, and in particular, 2 very distinct types, okay? Self-funded or insured insurance versus fully insured plans. So let's start out with a definition, okay? Big question, a big myth or non-myth is, am I required as an owner, as a business owner, to provide health insurance to my employees, okay? So let's first of all put you into 2 buckets. Let's either put you in the small employer bucket or in the large employer bucket. If you're a small employer, there's essentially no requirement, no penalty for not offering health insurance. So what's a small employer? Okay. A definition according to the Affordable Care Act is that a small employer is defined as an employer who has at least 2 employees, but no more than 50. Now, this is not a body count, okay? This is just not people. This is full-time equivalent, okay? So the denominator in this calculation is 30 hours. So a full-time employee is considered someone who works 30 hours, all right? So there's some math involved here, but you very easily could have 55, 60 employees, but not 55 or 60 full-time equivalent employees, okay? So the ones that are at 30, very, very simple. They're a full-time equivalent. The ones that are below, you essentially add them all up and do the math, and you come up with the number, okay? And we have clients that every year have to do this math. Am I above or below 50? So again, below 50 full-time, you're a small employer. No requirement, no penalty for not offering health insurance. All right, now, on the other end, if you're above 50 full-time equivalent, you're a large employer, according to the Affordable Care Act, okay? Now, some wordsmithing here. Are you required? No, you're not required. There's no law that says you must offer health insurance, okay? But guess what? While there's no requirement, if you're a large employer by definition, and you don't offer health insurance to at least 95% of your employees, then the IRS assesses you a penalty per employee. Now for 2020, that penalty was $3,860 per employee. okay? You can very quickly do the math, okay? If you have 100 employees, that's an easy $400,000 very quickly, rounded, okay? Now, again, remember the Affordable Care Act was passed in 2010, which when I looked that up, amazing how quickly time flies. But it's now been in place for that period of time. I remember back in the day, there were conversations on, well, do we pay or play? Is there, depending on our size, do we just pay the penalty? Or I haven't heard that conversation in a long time. At the same time, our bread and butter as a firm are small businesses. Those are the conversations we have most often. So again, just know that. Myth, no requirement, but penalty if you don't offer the coverage. All right, so you're all sitting there saying, well, if I'm a small employer, there's no penalty, there's no requirement. Well, then why the heck do I need to offer health insurance to my employees? It's very expensive. Well, right now, if you're a dental practice or a veterinarian practice, hiring and retaining qualified staff is very competitive, okay? And offering health insurance is a way to differentiate yourself amongst your peers and your competitors, because turnover stinks, losing good people stinks, and you just want another reason to make them sticky and make them loyal to you and your practice. And really right now, I think that's primary. Secondary is, well, I got to offer them health insurance. Number one question we get is, how do I pay less taxes? Let's get the tax benefit that's related to that. And so, a lot of the tax benefits that go with a lot of what we're going to talk about today help you minimize and reduce your federal and state income taxes, along with some payroll taxes. So those are the two key benefits to doing it, even though you don't have to. All right, so I know if I'm large or small, I know why I should offer it. Okay, now what are the options? Okay, and so really here, another two buckets we're going to separate into: self-insured or funded versus fully insured. All right, on the self-insured side, okay, this topic makes people nervous because it feels like, okay, I'm paying everything, okay? Well, what does that mean? It is not purchased from a health insurance company, okay? You as the employer, you still collect premiums from your employees. You still decide how much is my employee gonna burden versus how much am I gonna burden, okay? The employer or a group of employers that get together, design the plan with a vendor, and you choose the network that you're going to participate in. And again, you contract, or the group of employers contracts with a third-party administrator. And for a fee, that administrator processes and pays the claims for you, provides customer service to the staff. Yes, you as the employer or the group of employers, you assume the risk, okay? And you always worry about those big claims that, for the right amount are going to put people out of business, okay? Well, in tandem, you purchase stop-loss insurance to protect against those catastrophic claims. Now, as you probably already starting to figure out, these typically are most beneficial to a large employer. And here I'm not saying necessarily as soon as you get to 50, let's go for a self-funded plan. This might even be larger, okay? This is not a one-size-fits-all, okay? You need to work with a vendor to see, is this even an option for me? You need to assess the pros and cons versus a fully insured plan, which we're going to talk about in a minute. And like I said, there are people in the area that can assist you. Here locally, there's the Alliance, and the Alliance is a Madison-based group of employers that together offer a self-insured or funded plan. All right, so that's one bucket. Let's go into what some of you as small business owners might consider the more typical or fully insured plan. And that is, yes, you purchase the coverage from the health insurance company, okay? The health insurance company collects the premiums from you as the employer. You decide as the employer what you pass on to the employees, what you pay yourself. The health insurance company dictates the plan design. They determine the network options, in-network versus out-of-network. The health insurance company processes, pays the claims. They assume the risk. That's what you like. Yeah, I'm paying high premium. They assume the risk. And again, you need a partnership with a good, knowledgeable health insurance agent that knows your area, the options in your area, gets to know your needs, what the demographics and the life situation of your staff is and can provide you the best options. All right. So if you decide, all right, yeah, fully insured is probably what fits my needs the best, then what are my options under the fully insured bucket? All right. And I'm gonna, for purposes of keeping this at a high level, I'm gonna break this into 3 groups. And the first is defined network or managed care. What does that mean? That, again, tries to more narrowly define who you can see, what the rules are, specific requirements on what you're going to be paid if you see an in-network provider or an out-of-network provider. Okay, it's very tailored to narrow that network and the accessibility. Fee for service, again, more traditional, more flexible, more open. You can see anybody, but now the premium's going up. Okay, and maybe the portion that you're paying out of pocket is going up in return for that flexibility. And then I'll give you, really, this is more of a government program, but I'll talk briefly about a narrow program, the SHOP program, which you may not even know about, but that's a small business health options program, to see if, again, on a narrow scope, that might apply to you. All right, so what is a defined network or managed care plan? As I mentioned, very broadly, this is more of a narrow network that it really manages the cost, keep the premium down, at the same time restricts who you can see, the accessibility, focuses on quality of care. That's your definition. All right. Now, I'm going to break these into 4, and I'm going to kind of try to combine them to try to make this as simple for you as possible. The one right off the bat that I think is kind of on its own, and you have to check to see if this is even available in your specific area, but it's called an EPO, or an exclusive provider organization. This is in-network only. Okay, it's going to be as restrictive probably of all the ones that we're going to talk about here today. There's a certain network of providers that you can see. What you're going to find when you talk to your agent, and ER services are the carve out. Okay, an emergency comes up, you got to be seen, you got to be taken care of, but EPO, in-network only. The next 2 here, the one listed on this slide, and then the next slide I'm going to combine together. It's an HMO and a POS, or a point of service plan, and they essentially are the same thing. Okay, so when you're looking at an HMO, typically in-network only again, okay, but in certain cases you get prior approval, you can see an out-of-network provider. Okay, again, ER the carve out. Focus there, integrated care, prevention, and wellness. All right, HMO. An example here in the area would be GHC, or Group Health Cooperative, that many of you in this area probably have heard of. All right, in tandem with an HMO is what's called a point of service plan, which is essentially an HMO. Again, we're going up the scale of flexibility. All right, you can many times see an out-of-network provider as long as you're willing to pay more out of pocket. You likely have to select, in this case, a primary care provider. And if you want to see a specialist, you probably have to get a referral from that primary care provider. All right. Now, the next one goes in tandem with the fee-for-service plan. Okay. A lot of times a fee-for-service plan, within it will have a preferred provider organization, or a PPO. This is where, all right, I'm getting more flexible, because I can see an in-network provider, or I can see an out-of-network provider. But I know that because I really like my doctor and I want to see him out of network, I'm going to pay more. The health insurance company is going to pay less. Okay. So you got a more broad network option. Doesn't include the level of integrated or managed care that the HMO or the point of service plan provides. And you do not need that referral in most cases to see the specialist. So the PPO goes right into then the fee for service plan. And this is the one where, again, most flexibility. You can see anybody you want to, okay? Doctor or hospital, the most choice, but typically that's at a cost. Higher premium, depending on the situation, likely more out of pocket. In some cases, the doctor bills the insurance company pays the doctor their portion. The rest is then passed on to you to pay. In some cases, it's the reverse. You might have to pay and then go back to the insurance company and see what you can recoup from them. All right. Then that third main bucket that we want to make sure to cover is the SHOP program, or the Small Business Health Options Program, that again, you may not have heard about. this one, it's a way for employers with, this is the small, so 50 or fewer full-time employees. It's just an option for you, okay? Really, you talk to your agent or your broker to see if this is something that works for you. This is the one you've heard about, the different metals, the bronze, the silver, the gold, the platinum. This is where you would select one of those 4 coverages. And basically you go to healthcare.gov, get the details, talk to your health insurance agent, see if this is something that I'm eligible for. Because where it can be lucrative is if you're eligible, there can be small business healthcare tax credits, okay? Free money, reimburse you for the coverage you're providing. At a very high level, to qualify for those tax credits, okay, it's even more restrictive. You got to be at less than 25 full-time equivalents, and then to get the maximum all the way down to 10. So the window's 10 to 25. The average compensation of your staff has to be between $25,000 and $50,000. And you need to pay at least 50% of the premium. So again, very narrow focus on who might qualify. But if those things that I just listed apply to you and you didn't know about this before, this is going to lead to a conversation with your health insurance agent. All right, I got to take a breath. I got to take a pause, and I'm going to pass it on to Matt, who's going to kind of drill down on some of the features that are within most of these plans.
Thanks, Andy. So yeah, Andy did a great job of walking through some of those different kind of at a higher level plan designs and plan types that are out there. But even once you think you've found the type of plan that's right for you and it's going to work best for you and the employees, there's all sorts of features underneath and inside that plan that you're going to have to start making decisions about. And these features are the things that most of us are pretty familiar with from a health consumer standpoint. As you think about the health insurance you're enrolled in, it's things like, what's my deductible? How much co-insurance do I have to pay? Is there some sort of out-of-pocket limit for the year? What's the prescription drug coverage? All sorts of different things to consider underneath that umbrella of the plan. And these are really important considerations because each of these, as you change what that out-of-pocket limit is or what the copayment is really going to affect what the premium is that the business is going to have to pay on the health insurance plan. So as you get that first quote, you might see a premium that's a lot bigger than you're interested in. By changing some of these features underneath, you can have a big impact on what that premium is and can potentially lower it a lot or potentially increase it a lot, depending on what you want those features to be. And as you look at the plan, you're going to have a different perspective on things as the owner and plan sponsor who has to pay the premium bill than an employee might have, or that even you as an owner / employee who's getting your coverage through the business might have in terms of the type of coverage you want and how much you want and co-payments and co-insurance and things like that. So there's a lot of important features to think about and things that you'll want to talk through, you know, with your agent or with your HR folks as you're coming up with that plan and putting it in place. And then within the plan, because of the Affordable Care Act, there's all sorts of essential benefits that have to be included in your health insurance plan to make it conform with the ACA requirements and to make sure you can escape that penalty that Andy talked about. Different types of services, hospitalizations, laboratory services, and prescription drugs that have to be covered. These are the essential health benefits as defined by the ACA that are required to be in the plan. So those are important things that you have to make sure the plan has. Your agent can help you work through that to make sure they all exist and are there in the plan. So those are the ACA requirements at a federal level. You know, we're based here in Wisconsin, have lots of Wisconsin-based clients that we work with. So there are also some Wisconsin considerations you need to think about there. Wisconsin has a different list of mandated benefits, things that have to be in the plan as the insurer is selling the plan. Very similar to that ACA list, but a few differences. There's some Wisconsin-specific mandates for providers and which types of providers have to be and can be reimbursed for services, who has to be covered by a plan from an insured standpoint, and then again, some similar types of benefits that have to be mandated in there. And in the state of Wisconsin, it's the Office of the Commissioner of Insurance that controls those and puts out all those fund policies. So as you're thinking about that plan and what you want to put in place at your office, at a high level, you've got to decide what kind of plan do I want, fully insured, self-insured, what kind of features do I want? And then there's a long list, and we've got some of them listed here, but this certainly isn't the full list of other considerations in there that you're going to want to think about. Obviously, we've got there at the top the cost. That cost is going to be really important. Can the practice or can the business afford that monthly premium? And are we getting enough of a benefit for ourselves and for the employees to make that cost make sense? But then there's going to be all sorts of other things to consider and important considerations, and they're going to be very different from one practice to another and one business to another, from one geography to another geography. And this is where it's really going to be important to work with your insurance agent if you've got an agent you're working with, work with your CPA, work with your attorney, work with the HR professionals to make sure you're considering all these things, make sure you're getting striking a good balance between cost and coverage, striking a good balance between the cost to the employer and the cost to the employees if they're going to share in that monthly premium, and getting it for the cost you're paying, making sure you're getting good coverage, good benefits to make it worthwhile for everybody. So lots of important things to consider. And then unfortunately, in all cases, your covering employees doesn't stop when the employee leaves your practice or leaves the business. There are some federal rules, those COBRA rules, that apply to any employers with 20 or more employees, that if an employee leaves, they can elect to have coverage for up to 18 months after separating or terminating from a business. In some very specific circumstances, it can even be up to 36 months after they leave you, that they still need to be covered under the plan you have in place. The good news there is that as the employer, you're not responsible for paying the employee's cost once they leave. You can pass their full premium cost off to them, and they'll have to write a check or somehow cover that cost back to you as the employer. But there are things to remember there. And there are rules at both the federal level, the COBRA rules, and at the Wisconsin level, if you're a Wisconsin employer, that govern when you have to cover employees after they leave and for how long. And in some cases, there's going to be a federal law that's a little bit different from the Wisconsin law, and unfortunately, you have to go with the law that's most favorable to the employee, the insured person there, not what's most favorable to the employer. So that's the health insurance piece at a high level. And then with the health insurance, there's some other health-specific benefit plans that you might want to be able to put in place and take advantage of in addition to that. So on the IRS side, they're called Section 125 plans. They come from the Internal Revenue Code, Section 125, lots of times more commonly referred to as cafeteria plans. And these are plans where the employee has a choice in a lot of cases of either taking cash compensation in the form of a paycheck or electing to have some of their paycheck go into some sort of cafeteria plan where they have those tax-free dollars that accumulate that they can use for all sorts of different things. As we talk about things today for health insurance, what we most commonly see is that those dollars would be used to cover health insurance costs that aren't covered by health insurance. So maybe the co-pays or deductibles. It might help cover the employee's share of the premiums, or they might help cover kind of health-related expenses that aren't covered under the plan. So like a dental insurance or a vision insurance plan. So these can be plans that the employee contributes to on a pre-tax, tax-free basis, or these can be dollars that an employer puts into a plan for an employee. The employer gets a tax deduction for the dollars going in, but the employee never has to pick up any kind of taxable income because of that. So these always have some sort of have to have a written plan document that governs what's going on, what kind of expenses are covered, fun things like that. Usually there's a shortened summary plan description that also describes that in more everyday talk. And then these are qualified benefit plans, so there are non-discrimination rules, eligibility testing, and the plans have to be designed and administered so that key employees, owners aren't unequally benefiting from the plan when compared to our more normal or rank and file employees. So 3 big options that we want to talk through today that are kind of the 3 big pieces of cafeteria plans, Section 125 plans, as they relate to health insurance. So we're going to talk a little about HSAs, health savings accounts, flexible spending arrangements, FSAs, specifically as they relate to health, and then qualified small employer health reimbursement arrangements. I don't think there's any quick or easy way to say that one. It doesn't shorten up nice like HSA or FSA. And we're going to talk about these specifically as they relate to health insurance, under the flexible spending arrangements, those FSAs, you can also have FSAs in place that deal with life insurance, disability insurance, dependent care, adoption and assistance. Really important, can be really powerful tools as an employer, but just outside of the health view and lens we're taking for things today. So first up, the HSAs. Either employee or employer contributions can go into an HSA. If it's an employee contribution, it's pre-tax, so they're taking dollars out of their paycheck. They're going into the HSA and they don't have to pay tax on those dollars. The employer contributions, the employer gets a deduction for the dollars they're putting in. The employee doesn't pick them up as taxable income. These are usually administered by banks or credit unions. Most banks nowadays and credit unions have HSA products that you can set up. The funds go into the HSA. The participant can use those funds to pay for health costs, healthcare costs that aren't covered by insurance, whether that's deductibles, premiums, things like that, or things that are kind of outside the scope of the plan but are still qualifying medical expenses based on an IRS definition. The funds can remain in that account and grow until they're used for qualifying medical expenses. This is not a plan where you have to spend all the dollars that go in within the year. We'll talk about that under the FSAs, but under the HSAs, it can grow for as long as you need it until you spend it. They can earn interest, they can earn dividends depending on how they are invested, and all those earnings, all that income is tax-free. And then the money you take out is tax-free as long as you're using it for a qualified medical expense. If you don't use those dollars when they come out for a qualified medical expense, they are subject to income tax, and they are subject to a 20% penalty as well, unless the dollars are coming out because of a death, a disability, or if you've reached age 65, you can pull those dollars out, still subject to tax, not subject to a penalty. And then to be able to participate in an HSA, you have to be covered under a high deductible health plan. There's a very specific definition to that. Your minimum annual deductible has to be at least $1,400 if it's a single plan, $2,800 if it's a family plan, and then your maximum annual out-of-pocket has to be $6,900 single, $13,800 if it's a family plan. A couple other little limitations for the HSAs. You can't be enrolled in Medicare and participate in an HSA. You can't be claimed as a dependent on someone else's tax return and be enrolled. And then there are limits for how much can go into the plan. Limits go up a little bit every year for inflation, so we've got those up on the screen there. The other great thing about the HSA is you actually have until April 15th of 2021 to make your contribution for 2020. So similar to IRAs, you get a little bit of time into the next year to make all your contributions for the previous year. The other pitfall to watch for is on those contributions. Those are for the full year, and those assume you're covered by a high deductible health plan for the full year. If your insurance changed during the year and you're only on the high deductible plan for a portion of the year, you get a prorated portion of that contribution for the year. So that's the HSA. Let's compare that to the next one up, the FSA, the flexible spending arrangement. At a high level, pretty similar. Either the employee or the employer can contribute to the FSA. If the employee contributes it, it's pre-tax dollars. If the employer contributes it, the employer gets the deduction, the employee doesn't pick it up as taxable income. These are always administered either by the employer or there's a third-party administrator who takes care of the process for the FSA, where you'd submit expenses, receipts to the TPA or the employer, and they'd send a reimbursement to you, the employee, with the account for those expenses you have that weren't covered by your health insurance. And again, just like with the HSA, those distributions are tax-free if they're coming out and being used to pay for qualified medical expenses. The real big difference here with the FSA compared to the HSA is this is very much a use it or lose it plan. The dollars go in a calendar year, and you have that calendar year, plus you get a little bit of a grace period into the next year to get reimbursed for any of your expenses. If you elect to put more into the plan than you have in expenses for the year, that difference, for the most part, you lose and you don't get it back. There are some provisions that plans can adopt there's some small dollar amounts that can get carried over from one year to the next. And those have been expanded a little bit for 2020 because of COVID-19 and all the problems that's causing. But in general, think of the FSA very much as a use it or lose it. You only want to put in as much in a year that you think you're going to be able to use and can out. The FSA, those are the accounts where there are some, you can have a dental dependent care FSA. You can also have some limited purpose FSAs just for dental or vision. And the other type of FSA we see a lot in a lot of employers is called a premium only plan or a POP plan. That's an FSA that's in place just to allow employees to contribute towards their portion of the health insurance premium with pre-tax dollars. So on a pre-tax basis, you've got to have that premium only plan in place if you want to do that. Otherwise, the dollars the employees are contributing towards the premium every month, they don't get to do on a pre-tax basis. Last one we want to talk about here is that qualified small employer health reimbursement arrangement. There are a couple different types of HRAs, health reimbursement arrangements, or health reimbursement accounts. There's an individual coverage HRA, there's an accepted benefit HRA, but we're going to focus on this qualified small employer one. I think it's a little bit more applicable to most of the practices we work with. These type of plans are funded solely by employer contributions, so tax deductible employer contributions, and therefore employers who are not offering group health insurance. So you can't offer group health insurance. If you don't offer group health insurance, this is a way to get some dollars in a tax-free way to your employees to cover, for them to cover their own health insurance premiums and out-of-pocket expenses. For 2021, there's a limit per employee for how much you can contribute to these types of accounts for your employees, $5,300 for individuals, $10,700 for a household. And then the employees can use those dollars and get reimbursed for health insurance premiums or any out-of-pocket qualified medical expenses they have. And they've got to provide some sort of proof of payment, some sort of receipt that they paid for that expense, and then they can be reimbursed for it. And they must have what's called a minimal essential coverage health plan to qualify for reimbursement on the premiums. And that's a real technical term we're not going to get into, but the health insurance agents will be able to help individuals make sure they have that type of coverage. One of the great features here is that these balances then carry over. Any balances left in that plan for the employee carry over to the next year, and they can be used that next year at the employer's discretion. So for employees who might not have much in cost one year, those dollars can roll over to that next year. Hopefully not a year where they have a lot of expenses, but in case there is some sort of health issue in that next year, they have more dollars available. The dollars, any balances do forfeit when the employee terminates and leaves your practice. And you've got to give employees notice at the beginning that this type of plan is going to be set up for that next year, so everybody knows what's going on and can participate. So you can give all employees, in terms of funding, you can give all the employees the same amount. You can change those amounts based on whether it's just the individual or a spouse or dependents who are also being covered. And you can also do some work to vary that amount based on age, but you've got to be really careful here. If you're doing this, that the amount you're reimbursing really has to be tied to reference plans that are out on the individual marketplace. So you really want to make sure you're doing your homework here and not getting yourself into any discrimination issues within that plan. As you think about these types of plans that can layer on top of your health insurance, you can offer multiple types of plans and they can work together sometimes, but you've got to be really careful about which combination you're putting together. That's where you really want to work with your attorney, your insurance agents, all your advisors to make sure you're putting plans together that really do work together and not getting yourself into very, very difficult and tricky situations to unwind. And then with any of these issues, please make sure you're talking to your attorney, your legal counsel, your health insurance agent, your HR advisors, your CPA to make sure everything you're doing is working together and is working the way you want it to work. And that you're not getting yourself into any discrimination issues towards any key employees, highly compensated employees. So with all that, I'm going to hand things back over to Andy to go through some other important considerations based on your tax structure and your entity type.
All right, thanks, Matt. Okay, we're getting to the home stretch here, but there's still some important things that you really need to consider. And as I'm sure you've heard all throughout, your career as a business owner, the type of entity you are affects you in all different ways, and it affects you here. Okay. As far as when Matt was talking about a cafeteria plan or a Section 125 plan, that's very broad, okay? It's very simple. If you're an employer, if you have employees, if you're subject to U.S. income tax, you're eligible to sponsor a cafeteria plan. So I think we've all checked the box for that one. However, federal tax rules, they prevent a self-employed person from participating. So we'll define that here in a moment. The other thing, as you probably know, is that our federal tax rules are rather complex and strange and confusing at times, and they're no different here. There's some very strange reporting requirements depending on what type of business you are, how you're structured. So while certainly that could be a topic for a whole conversation, I'll give you an example of or two of how that might apply to you. All right, so what is a self-employed person? Okay, well, very broadly, that's a sole proprietor. Okay, sole proprietor, you report your revenue and expenses from your business on Schedule C of your individual tax return. Okay, so you know who you are if you're a sole proprietor. Partners of a partnership, that can in some cases be a general partner, limited partner. Partnerships are their own animal in that regard. Shareholders of an S corporation, if you own more than 2%, again, in a small business, that's almost all S corps that we're talking about. Most S corp owners are going to be greater than 2%. So that's the definition. What does it mean? It means that if you're under that definition of self-employed, there may be restrictions of whether or not you can participate in some of these features that Matt alluded to. And again, like with a lot of things we presented, this is not an exhaustive list, but a couple examples that you need to be aware of. For FSAs, if you're a self-employed person under that definition, you can't contribute, you can't participate. Again, that's a sole proprietor, partner in a partnership, or an owner of an S corp greater than 2%. You notice what's missing from that list? Owner of a C corp, okay? So we talk all the time, is it better be a C corp or an S corp? Well, here's a feather in the cap of a C corp, okay? In this case, C corp owner can contribute. Same limitations as anybody else, all right? Now, to further show the complexity, for a QSC HRA, like Matt said, no easy way to say that, the same rules apply, except a couple more carve-outs, all right? You as the owner, you as the partner, you as a sole proprietor may not be able to participate, but there are a couple carve-outs for a W-2 spouse. If you employ your spouse in the business in a partnership, or if you employ your spouse in the business as a sole proprietorship, okay, they can participate. All right. So again, a little bit of a loophole. Maybe you don't get the benefit as an individual, but if you look at yourself as a family, you may still be able to get the benefit of participating in the program through your spouse if this applies to you. All right. Now, as far as the health insurance premium, because at some point, if you're participating in a health insurance plan, if you're offering it, there's premiums to pay, there's premiums to deduct. So here's those strange rules that I just want you to be aware of and focus right in on the type of business you are. C Corp, okay, simple, all right? You just deduct it on the corporate income tax return, all right? Straightforward. Now, there's not a lot of difference, but if you're an S Corp owner, they make you do 3 steps to get to the same place as a C Corp owner, all right? For an S Corp, as an owner, your premium has to be added to your W-2. Then it's deducted on the corporate income tax return as officer's compensation. And then you deduct it on page 1 of your individual income tax return. I remember when I was a young staff accountant, this confused the heck out of me. It took me a couple of years to figure this out. I had to draw myself a little picture to figure it out. But you simplify it. What do you have here? You have 1 addition, 2 subtractions. The addition, subtraction cancel each other out. You have a deduction. All right. Same as the C Corp. They just, for whatever reason, make you do it in 3 steps. Sole proprietor, simple, you deduct it on page 1 of your individual income tax return. Only caution, if it happens to be a year where your profitability is limited on your Schedule C, it may limit the available deduction for the health insurance premium, but hopefully that doesn't apply to you. And then, as I mentioned, partnerships are their own animal. So that one, we got to see, are you a limited partner? Are you a general partner? Are you paid guaranteed payments? A lot of facts and circumstances that will we'd have to look into a little further there. Okay, mentioned at the beginning, I don't need to remind you, strangest year you've probably had as a business owner. COVID-19 added a whole different layer of complexity as far as health insurance, because suddenly many of you had to lay off people, or you had to furlough people. You had to figure out, what's the difference of a furlough and a layoff? What the heck does that mean? Does it make a difference? I have to reduce their hours. What do I do with their health insurance? I don't know when they're coming back. Do I have to go on COBRA, Wisconsin continuation? All those things Matt talked about. Well, I just want to let you know, during that time, we fielded a lot of those calls, and we provided the guidance we can based on what the state had provided for guidance. There is a nice resource out there on the OCI website. And again, I realize that at this point, hopefully you're not dealing with that anymore, but if at any point you are, that ended up being a good resource for us to provide guidance to our clients. All right. We are entering the speculative portion of the presentation, okay? This is truly just for, I don't know what it's worth, but our clients like to know what's coming, what might happen, how might it affect me as a business owner? And in this case, some of this may happen, some I can tell you right now probably won't happen, but some of it may end up affecting the cost of premiums and healthcare, okay? So under the Biden administration, all right, again, flashback to 2010, he was vice president when this was passed. So there's going to be the natural desire for many reasons to continue the Affordable Care Act, strengthen it, continue it, okay? So that's one thing that's expected. We'll talk about the headwinds that the Biden administration may face, but these are all desires at some point of the administration. Prescription drug pricing, been in the news for a long time, try to lower that. I think that is something that will continue. He talked about lowering Medicare eligibility from 65 to 60. Obviously, hospitals would not be fans of that proposal. Don't think it'll happen, but you may have heard about it. You'll continue to hear public option Medicare for all, re-implementing the individual mandate, all things you'll hear about. Whether or not they are implemented or not, you'll hear about it. Pricing transparency, avoiding surprise billing. I think this will continue to be in the news. I think they want to make it more clear on exactly what service you're getting for what cost. Just try to make that more transparent for everybody. Again, that may lead to lower cost. Now, the headwinds that the administration will face is the narrow margins in the House and Senate. You have now a 50-50 tie in the Senate, with the tiebreaker being the vice president. In the House, if you're keeping track, it's 222 to 212. So it's just a 10-member majority. So narrow. Anything that wants to get passed is going to have to in some way possibly appease both sides. The other headwind is the makeup of the Supreme Court. And I think the Supreme Court rulings will affect current legislation and any future legislation that is proposed and passed. I think what you'll see a lot is what you've seen in the last couple of administrations. You'll see a lot of reversal of previous executive orders and institution of new executive orders. Okay, another thing we're asked a lot by our clients is, what are you seeing out there? I mentioned at the beginning, we work closely with our clients. We know their business, and what's good is we know trends. We see what's happening as it's happening. And so what we're seeing is more high deductible plans. Why? Typically, high deductible plans, while more cost to the insured, to the employee, because they got to pay that higher deductible, less premium to the employer. So you get the benefit of both. Okay, I'm offering coverage, but hopefully I'm saving a little bit on the premium. So that's a trend. At the same time, employers are realizing that's a burden for the insurance. So in some cases, they're supplementing that with HSA. Maybe they're making a contribution on the employer side on behalf of the employee. And then of course, the employee always has the option to, contribute more up to the limits that Matt discussed earlier. And then this goes without saying, because it's what we started the conversation with, more businesses and more employers are feeling the pressure, if they don't already, to offer a health insurance plan in order to retain and recruit the best and the brightest. All right, so now it is the home stretch. And I do want to allow time for, a few questions if you have them. But you might be saying now, oh, where do I go from here? And as I mentioned at the beginning, you're all at a different point. None of this is one size fits all. All right. You all have a different demographic, you're all in a different location, you all have different needs. So the first thing you got to do is say, what matters to me? What matters to my staff? That's what it comes down to. Okay, once you think you have a pretty good idea what you need, reach out to your strategic partners, reach out to your health insurance agent or HR consultant, depending on where you're at. You know, if you don't have an employee handbook or you haven't looked at it in 10 years, don't have a Section 125 plan, you know, you may need an HR consultant or a attorney to review those or to just start at ground zero and draft them. And then at the right time, reach out to that health insurance agent and say, all right, I'm ready. Or, hey, you know, are there other options? I heard at this webinar that I could do this, this, or this. Are there other things that meet my needs? I mentioned the employee handbook, cafeteria plan, you know, and the same time, you have to realize that, you know, these are not mutually exclusive. You know, I think it's always best when a small business owner is working together with all of their advisors, making sure that the tax advisor knows what's going on, making sure we know, are you reporting things correctly? Are you actually getting the tax benefit that you think you're getting? Are there other things you should consider? And, you know, in a lot of cases, we know who your health insurance agent is. We can, with your permission, you know, engage with them. Same thing with your attorney. You know, if you give us permission, we can engage with them and, you know, be at the table when these conversations and decisions are being made. All right. Okay, last thing I want to say before I turn it back over to Lee. Obviously, as I mentioned, we're not health insurance agents, we're not attorneys. These were some great resources to us, and I think as business owners at times, you know, they might be good resources to you. You know, as I said, I think part of the requirement of being a small business owner is, like it or not, you need to know a lot about HR. And I found the SHRM website to be valuable. A lot of their content is restricted to their members, but they have blogs out there. They have publicly available documents. It might be worth your time to, you know, peruse the website. You can leave the IRS to us, but if you want to, the IRS has a ton of information on this stuff. And again, in Wisconsin, the OCI website is invaluable. If you happen to be joining us from another state, I'm sure that your state has a very similar organization that can be a great resource as well. All right, I'm going to exhale, and Lee, I'm going to turn it over to you.
Yeah, you're going to need a long exhale. That's a lot of information, Andy and Matt. Guys, so much information. Thank you. We've already had a few questions come in, and we'll get to those in a second, but I just want to remind you all, we do have a few minutes for Q&A. So open up the chat box in Zoom and submit your question to all panelists. So I know we've had a couple of more maybe technical questions. Just as a reminder, you know, as with us not being the experts, we're not going to address anything specifically technically, but if you do have questions that aren't getting answered, feel free to reach out to us separate from this. Guys, one of the questions we did have was actually specifically around like a specific referral. Can you just talk about kind of how we would handle that? I think you touched on it, Andy. There's really no one size fits all.
Lee, was that in particular to a health insurance agent or to an attorney?
Yeah, it was like, hey, do you, I think that, sorry, I don't have it up right now, but it was, you know, do you have a couple of names that you could refer to us?
Yeah, you know, I think it'd probably be premature to, in a forum like this, to give you specific names because we don't know what area you're in or what specifically you're looking for. But certainly reach out to us at any time, and then, you know, we'll do our research, and based on where you are, we will provide you some resources that you can reach out to.
So you guys talked at the beginning, obviously, if you have fewer than 50 employees, health insurance is not a requirement, but can you talk a little bit about what you've seen with your clients? Like, and maybe it's different with dental practices and veterinary practices, but how many of your clients would you say, and sorry to put you on the spot, offer health insurance when they have fewer than 50 employees?
Yeah, so I'll start first, Andy, to keep you going on your break here. Yeah, so most of my clients are in the dental space or the vet space, and most of my clients offer health insurance within their practices. On the dental side, I'd say it's more than 85% of the practices I work with offer health insurance, and probably more than 85% of the practices have fewer than 50 employees. So there's no requirement that they have it, but most offer it. And I really think that's because it's in the dental space, especially right now, hiring quality staff, retaining quality staff is very, very difficult. And if your practice isn't offering health insurance, your great employees can find a practice across the street, down the block, that will pay them as much as you're paying them and will offer health insurance. So in the dental space, you really have to offer health insurance to be competitive with your competitors in terms of staffing and talent. On the vet side, it's not that high. Probably 50 to 60% of the practices I work with offer health insurance, and those practices that do offer it are a little bit more on the leading edge of using that as a way to attract talent, retain talent, and be able to attract talent away from practices that don't offer health insurance.
And can you compare maybe the importance of health insurance to some other benefits that people offer? Let's, just looking at pay and 401k and things like that. Where does health insurance rank in that that process?
You actually bring up a great point, Lee, because, I think one thing that's become a standing agenda item in our client meetings, especially in 2020, is staffing. As a small business owner, this is front and center in your mind. This is a struggle. This is a frustration. Okay. So we have these conversations, and one thing, you got to be careful. But one thing that I started to tell clients is find a good way to ask your staff, what benefits matter the most to you? Because I realize that can open a Pandora's box, but in some cases you'll find that you think you're offering a great benefit, but quite honestly, you'll find out your staff doesn't care about that one. You could eliminate that one, save money, and put it somewhere else in something that really they value. So that's the first thing I'll say. Secondly is, I think health insurance is probably one of the most important benefits, followed right behind by retirement plan, that 401k plan. I think there was a time, if you go all the way back to 2008, I remember 2008, 2009, there are a lot of retirement plans that went away. Okay. But again, as the economy built back up, guess what? They came right back. And so right now, just based on where things are at, based on the struggle to retain and attract, it's number one or number 1A for me.
Well, great. We're getting to the end of our time. So Andy and Matt, again, thank you so much good information. As we wrap up here, I'd like to let you know that you can visit svaaccountants.com/hub, where the recording of this webinar will be located, as well as lots of additional information on upcoming events. So our next webinar is tomorrow, and it's on how to be more efficient in your accounting. It's accounting automation. Then we've got a webinar on Tuesday that will be going over the most recent stimulus and second round of the PPP loans. Then we've got a couple of industry-specific events coming up as well. So for you vets, we have a webinar we're doing with the WVMA on January 27th. And for you dental practices, we've got an interactive roundtable discussion coming up on January 28th. Now, we are limiting attendance for that roundtable discussion because of the interactive nature. So I know we've already had quite a few signups. So if you are interested in signing up, I'd suggest you do that here this week still. But that's going to be a very exciting event. And I think Matt is hosting that one. So if you've had enough of Matt, maybe don't sign up, but otherwise go for it. And I'd just like to remind everyone that the SVA team is only a phone call or an email away. So if you're a client, reach out to your SVA professional as questions arise. If you're not currently an SVA client, please contact me, Lee Schwartz, and I can get you the help or the answers that you need. So thank you again for joining us today. Have a great rest of your day, and we hope to see you at some or all of our upcoming events. Be well.